Hello there, BoBo the Bitcoiner is back. Do you know that the Bitcoin ETF is opened 24/7, 365 days to trading, non-stop, different from the traditional ETFs that open only 5 working days a week. Before Bitcoin ETF was launched on the 11th of January, the global purchase of Bitcoin is only about $30 million worth of Bitcoin every day. All right. Now, just Bitcoin ETF alone, the daily purchase were $300 to $600 million. A clear sign of demand. Forget about the all-time high of $1 billion a day on the 14th of March. How can price not goes up? An increase of purchase by 10 to 20 times a day. Straight, simple arithmetic, right? Okay. The last few days, there were a net outflow from Grayscale's GBTC, which is greater than the combined net inflow of the other 9 asset managers. Last few days, I call this noise because GBTC only have about 80 to 90 days worth of Bitcoin left. Actually, GBTC could have been exhausted by now or much faster. Who want to pay a management fee of 1.5% when all the other 9 asset managers were charging 0.25% or less? Every single point in the fee means significant cost to the institutions when they are talking of tens to hundreds of millions dollar investment. Obviously, there are reasons why Bitcoin was not disposed of earlier. GBTC was not disposed of earlier. For example, the British holder of GBTC comes under the Mifford Rules or British Mifford Rules, which does not allow them to buy US ETF. So they can't change. Also, the EU has similar rules. So the best bet for them is to hold on to their GBTC. There are also US GBTC holders who can't sell because of tax reason, etc. However, it is clear that Genesis, a bankrupt crypto lending firm, was granted approval last month to offload roughly $1.6 billion worth of GBTC. That's a major exodus. GBTC aside, is there any other reason why inflow from the other 4 major asset managers have been reduced substantially? Something is strange, right? It cannot be suddenly institution lost interest. Well, chances are investors decided to lock gains after market runs up. And to be cautious, on the cautious side, as they are also talk on the potential regulations or restrictions on the cryptocurrency in general that might cause jitters among the investors. Again, I call these noises once jittery goes away. Okay, now the logic I always relate to is Bitcoin fundamental is intact and has not changed. Right? It has proven itself for 15 years already. Everything works fine. Now the institutions are given the opportunity to capitalize on the Bitcoin ETF. Why not? Bitcoin has been up and up for the last 15 years. No reason not to be up for the next 15 years, right? After all, ETF managers' job is to make money for their clients. And Bitcoin has been the most outstanding return that no other asset has come even close. You think institutions would want to miss this opportunity? No way. So, like it or hate it, all right, believe it or not, the fact is there for all to see. Bitcoin has defied skeptics, survived crashes, and consistently bounced back. It started from zero and currently at, I think it's around 64,000. And that is beyond imagination, no? I simply do not understand why people are not believing it. All right, and still cannot accept it. Even if you don't understand Bitcoin, you cannot deny that Bitcoin has performed. Right? It's a fact. It's beyond doubt now, right? It's okay if you do not want to invest in Bitcoin, okay, your personal choice, but institutions cannot afford not to capitalize on this money-making potential. It's their lifeline. They will lose their clients to the performing institutions. To top it all, by April, Bitcoin rewards will be half to 450 Bitcoin per block of 10 minutes. By that time, the supply will be even more squeezed. And you know lah, short supply, high demand means what? Sky high prices. Wait and see, okay? Hope you enjoyed today little look into Bitcoin ETF. Thanks for watching. See you. Bye-bye.